Singapore's digital economy is expected to grow 22% to reach $18 billion this year. This as more businesses take on the latest technology to digitalise processes and drive growth. A report by Google, Temasek and Bain Company also says that growth could almost double to $30 billion by the year 2025. Now, this will be driven mainly by e-commerce and a recovery in online travel. The report singles out Singapore as a primary destination for digital investment, along with Indonesia. Deal values here grew from $4 billion in the first half of last year to $7 billion in the same period this year. Digital financial services, including payments, remittances and insurance, are attracting the most investor interest. Now, they make up 25% of investments at $1.9 billion. But 1 in 2 venture capital firms are expecting this to increase in the long term.
Well, for more, we speak to Aadarsh Baijal. He is a partner and head of Southeast Asia digital practice at Bain and Company. Aadarsh, first, the report. We saw forecasts of Singapore's digital economy to grow by 22% this year. How does that stack up with the rest of the region?
Thanks so much for having me, Jill and Don. Maybe a few comments on Singapore's digital economy versus the region. Singapore actually grew faster than the rest of the region, which grew at about 20%. When we look at the other countries, Vietnam grew the fastest at about 28%, followed by Indonesia, Philippines, and Singapore, all of which grew at about 22%. Now, this is very robust, given that Singapore is quite a mature market. It has, over 80% penetration across many of the verticals like e-commerce, food delivery, transport. So to see, growth at over 20% was really great, and a lot of that is still to come. We're quite optimistic about the growth looking ahead.
Aadarsh, Singapore is a competitive digital hub. So let's dig a little deeper into what's spurring all that growth in the digital economy here. You mentioned e-commerce is one of them. What else is really driving what we're seeing in this uptick in the digital sphere?
Sure. When we look at the sectors, e-commerce is the most mature, so actually grew the slowest out of the sectors at about 4 or 5%. Whereas in the region, that still continues to be a 15-16% growth. So Singapore's e-commerce market, while it's still growing, it's starting to reach a slower growth trajectory given the penetration. But the other sectors are still growing quite fast. So food and transport grew at about 20%, which was in line with the rest of the region. Whereas entertainment and travel grew much faster than the region. So online travel, which is one of the oldest digital sectors, actually bounced right back from the pandemic and grew at almost 125% compared to last year. So that was a big driver over the past year. And then entertainment, which covers music streaming, video streaming, ads, gaming, that as well grew at about 12%, so faster than the region. And despite the high penetration, there's still ample headroom for growth because there's still quite a bit of room in terms of spend per consumer. Singapore, in fact, is one of the only markets that for the 2025 outlook, we increased it slightly upwards. This year, we revised most of the markets downwards slightly for 2025, given the headwinds. But Singapore's strong growth this past year led us to believe that it could go slightly faster over the next few years, particularly thinking about travel and entertainment, as well as groceries in the e-commerce sector, which is still very low in penetration.
Well, you're certainly optimistic that this growth can be sustained. Are you so sure, given factors like the high inflation and other headwinds like macroeconomic situations that we're facing?
No, it's a very important point. Sustained inflation and global macroeconomic weakness are definitely the two biggest risks. And there are risks to Singapore's economic growth and consequently the growth of the digital economy. At this point, the digital economy is sort of following the broader economic outlook. And while there's a lot of uncertainty around the rest of the year and the 2023 outlook, when we look at the first half of the year and the data from the first half, the Southeast Asia region is still relatively less impacted than many other parts of the world. It's not immune, but less impacted. Inflation is slightly lower. The consumer sentiment is slightly higher. So our current forecasts are obviously factoring in a slightly optimistic view that Southeast Asia remains a bit protected. It comes out of this current situation by next year. But as you mentioned, if we have a longer period of inflation or recession in major global markets, we will definitely face a slowing down and slower growth.
And for digital financial services specifically, Aadarsh, I mean, they're doing really well. There are lots of entrants coming in here, lots of players jostling for a slice of this pie. They make up 25% of investments for Singapore this year. So why are investors so bullish on DFS?
Well, first of all, the digital financial services space has been growing steadily since 2019 when we first covered it with a deep dive special report as part of the economy report just on digital financial services. It was just emerging then, and it's been kind of warming up and growing. And as you said, finally, it looks like it's going to be overtaking e-commerce from the investor lens. It's important to understand this is not one sector. It's actually made up of multiple verticals, including payments, remittances, lending, investments, and insurance. So it is multiple markets that we look at together. And while we've been on a journey of digitizing of payments and remittances for a while, the other markets are still very, very nascent. So lending, investments, and insurance, the digital market is actually still low single digits, less than 5% penetration of the broader financial services market. So you have to kind of take that in context that there's still a huge amount of headroom. The broader financial services market is just very, very big. And we are just at the tip of that when we think about digital financial services. So that's the first reason why there's still a lot of interest. The other couple of reasons are that even in the markets like payments and remittances, which are relatively mature, there's still a lot of investments going into enabling technologies like payment gateways or monetizing solutions. So those are still attracting investments. And then we're just starting to see the digibanks, start up and take off, and that should drive more interest as well. So all in all, I think it will remain one of the hottest sectors for investment in the coming years.
Plenty to play for and still plenty of room to grow. Aadarsh, thank you for joining us. That was Aadarsh Baijal from Bain Company.